So today we have Brent Johnson. Brent is, although unassuming because he seems like a very mild-mannered guy, which he is, he's also a very controversial person in the economic commentary and the gold and in the dollar and in overall investing, and very interesting thesis. And it's popularized by a term that he made that's called the Dollar Milkshake Theory. And that's what I wanted to have Brent on to talk about. So thanks for coming on.
Absolutely. Thanks for having me. And it was fun talking to you before we went live, and I'm looking forward to talking with you more.
Thanks, Brent. So why don't we start there, right? So you listen to Brent talk and you're like, oh, he's just a mild-mannered guy, and he is. But you're very controversial because you have this really unique thesis called the Dollar Milkshake Theory. And there's two sides right now, right? There's like people that are gung-ho gold, and I have a lot of my money in physical gold, physical silver, and mining stocks. Yep. Some of those people hate you because I think you scare them a little bit, but you're also a gold fan. But then on the other side, there's the U.S. equities, invest in U.S. mainstream stocks. They like you, but then you have things that threaten them as well. So why don't you give us the whole synopsis?
Yeah. Okay. So, and I'm happy to do that. And, I appreciate you inviting me on to talk about it, because I do think that sometimes people hear about it and they don't quite get where I'm coming from. Because the reality is I don't even really like my theory, to be honest. I just think it's right. You know what I mean? Like I didn't set out to be controversial. I didn't, want to upset anybody. I didn't want to be, kind of a thorn in anybody's side. I just wanted to share what I was learning. And part of the reason I wanted to share what I was learning is I had to learn it myself. I couldn't find anybody to teach it to me. So I spent, as maybe you did, numerous hours and days and months, if you added them all up, on chat rooms and blog posts and obscure periodic journals. And, it was really, 10 or 12 years ago, I went through a really big period of self-education and discovery of how the monetary system actually works. And, that kind of led me to gold. And how I believe that's actually the foundation of, the monetary system in a free market. We don't live in a free market, but if we did live in a free market, it would be the foundation of the monetary system, I believe. And so I think that's always should be important for everybody's portfolio that they own gold. Some people choose to do it, some people don't. But I think regardless of whether you're a gold bug or not a gold bug, it doesn't hurt to have some gold around. But then I also, as I continued my education and started thinking about things and analyzing things a little differently, I came to the conclusion that while the dollar was an absolutely horrible currency, all the other fiat currencies were even worse. And so I kind of came across a scenario under which I thought it was possible, and there's no guarantees. I'm fairly confident, but there's no, it's not a promise, but I think there's a likely scenario where the dollar goes much higher before it gets inflated away or before it goes to zero, or however you want to describe that. And I think there's very few people that have the understanding of why that is. And as a result, I don't think too many people are expecting it. And because not too many people are expecting it, the asymmetry of some of the investments you can do, if I turn out to be correct, are extremely profitable. So I don't think it's something that you should just ignore. And if I'm right, it will cause chaos on a global scale. And again, I don't necessarily want this to happen. I didn't choose, to come out with this idea. I just think it's what's going to happen. And so I think I would, if at the end of the day, I'm someone who manages money for other people. So I want to make money off of this. That's my job. But I also want to help people. I want to prepare people for what's coming. And I think that the monetary system is a little bit, evil's probably the wrong word to use, but it has this little evil quality to it, because I think in some ways the people who actually have it figured out might get hurt the most. And what I mean by that is there's, I know a lot of people in the gold world, and I'm a gold bug. I think everybody should own gold. I think it's going to go to $5,000 and probably much higher than that. But one of the things that I think that people in the gold world have done is they've learned, that gold should be the bedrock of the monetary system. It is money in a free market. The Fed is going to print the dollar, and they're going to print so many it's going to get inflated away. And that's all true. I don't deny that. But there might be a stage that comes before that hits them upside of the head like a 2x4. And so I've tried to use kind of humor and some sarcasm and sometimes a little blunt force trauma to wake people up to the idea that this could happen. And I don't think some people like it. Anyway, I don't know if that helps set this up or not. I probably went on kind of a rant there, but anyway.
Dude, we're building a lot of suspense. All right, so tell me this. Let's talk, before we talk into more about the monetary system, we talk about your investments, we talk about gold. Let's go into more detail of this scenario you're talking about, where you're discussing the dollar milkshake theory, the dollar getting a lot stronger, a stage before we have a shift to hopefully one day a better or new monetary system.
Yep.
Let's talk about, when you say nobody understands, what does this all mean, and why? And because one thing that's confused people is when we did have this correction during the coronavirus, we've had this kind of recovery from infinite money printing. The dollar was like at 100 the whole time, and everyone was like, "What the heck is happening?" So let's talk about what this all means.
Yeah. So let me give you just a quick background on what the milkshake theory is and where it comes from. I guess the inspiration of it came from a movie called There Will Be Blood. And in this movie, Daniel Day-Lewis played this really ruthless oil executive, for lack of a better word. And towards the end of the movie, he was talking with one of his competitors who owned some land that he wanted to buy. And he was trying to convince this guy to sell him the land because he wanted the oil that was underneath that guy's land. And the guy wouldn't sell it to him. And he said, well, you know what? I really don't need your land. All I got to do is stick a pipe down from my side of the fence, underground into your oil, and I'll suck up your oil. And it will be like if you had a milkshake and I had a milkshake and I put my straw into your milkshake, I would drink your milkshake. And so that's kind of what I think is going to happen, is because after the global financial crisis, the world monetary authorities, and however you want to define that, central banks or politicians, whatever, they printed money into existence. They did fiscal stimulus. They flooded the market with liquidity. Yens, euros, pounds, dollars, reals. And I said they kind of mixed this big currency milkshake. But in today's global markets, just because you print in one country doesn't mean the capital needs to stay in that country. I can go invest in Brazil if I want. Someone in China can go invest in Russia, or vice versa. So that liquidity will go to where it's treated best, I think. And so, we've got this big currency milkshake out there. And I think for a number of reasons, the US is the most attractive place for capital. Now, many people say it's not a very attractive place. And I say, that's fine. Which place is better? And because it's all relative, the capital's got to go somewhere. And so I think for a number of reasons, the US has the straw that's going to suck up all that capital, and we are going to drink the milkshake of the rest of the world. And so the whole world is going to, mix the milkshake and put stimulus into and liquidity into existence. I just happen to think that we're going to drink it up. And when we suck that capital into the United States, it pushes our dollar higher. I think it will push U.S. asset prices higher, and it becomes a self-fulfilling prophecy. As capital leaves other places, it puts those economies under further pressure, and it makes the U.S. assets go higher. And then on a relative basis, the U.S. looks even better. So even more capital leaves those places, and it becomes this vicious cycle where I think we're going to get this kind of blow off top in the dollar, and perhaps U.S. dollar assets as well. And then it will all end extremely badly. That's one thing I forgot to say at the beginning. This is not a story that ends well. This is a story that ends very, very badly for the U.S. dollar, for U.S. assets, for the United States in general. But I think there's a road to get there that many people don't quite understand.
Yeah, and I think the people that are so addicted to wanting to see total apocalyptic collapse of the financial system immediately, they hate you because of that. Because you're basically saying, for a lot of people, there will be a little bit longer of this miraculous rosy, for a while longer, who knows, there'll be a miraculous rosy period. But so in the most basic way, so what you're saying is some rich guy in Singapore or Australia or in Europe or in Brazil, the people that have extra money are going to be investing in U.S. real estate, U.S. equities, Microsoft, Facebook, all the FANG stocks. They're going to be dumping their money, your thesis is, into there with all the excess liquidity that they have, that no matter what currency they have it in, they're jumping ship. to go push it into the American stock market and other related assets. That's what you're saying?
That's exactly right. And so
and
what
why?
I think, well, mainly because you got to understand that it's not just the Federal Reserve that is printing. We are printing a lot. And on an absolute level, we're printing more than anybody else. But you can't just look at the supply side of it. You also have to look at the demand side of it. And then you also have to look at why they're printing. The reason that the Fed is printing is because there's incredible demand for the dollar. They're not printing just for the hell of it. They're printing because the global economy is demanding it. And so while we are printing, we have the ability to print much more than everybody else because of that demand. But the thing is, all the other countries are printing too. Everybody else is in the same situation. The difference is that there's not a lot of demand for Brazilian reals outside of Brazil, right? There's not a lot of demand for Turkish lira outside of Turkey. So they're printing, and on a relative basis, they're probably printing more than we are. But there's not the same external demand as there is for the dollar. There's basically two dollar markets. There's the US dollar market, which is domestic dollar market. But then there's also all these dollars that are outside the United States. And those are called euro dollars. They're not euros. They're euro. Don't confuse it with the euro, but they're called, that's just the name they're given, euro dollars. And
they're basically international dollars.
That's right. Yeah. And there's loans out there denominated in US dollars outside the United States at least 13 trillion. And, there's some estimates that put it at 20 or 25 trillion. That's almost the same amount of debt that we have in the United States. The difference is when we get into a credit crisis in the United States, the Fed can come in and print more currency. There's no central bank outside the United States that can go print dollars in those euro dollar markets. And so, when you get a credit contraction and when monetary velocity stops and, you get into a recession and, people aren't spending as much and they start missing payments and you start having defaults because of the design of the monetary system where money is loaned into existence. When one default happens, it has the potential to cause another default and another default. And pretty soon you have a credit crisis where the whole fractional reserve banking system is kind of feeding on itself. The problem is there's no central bank or monetary authority outside the United States that has the ability to print collateral to stop that from happening. And so some people will say that the Fed will just bail out the rest of the world. And maybe they will. I think it's much easier to say in theory than it is to actually do in reality. And again, they won't do it until the market demands it. And what happens when the market demands it is that the dollar goes up. And people always say to me, the dollar's going to go to zero. And I always say, well, if the dollar's going to go to zero, why does the Fed need to print it? If nobody wants the dollar, why would the Fed keep printing it? The point is they print as a reaction to the demand. And so I think there's a little bit of a cause and effect that people get mistaken when they think of the Federal Reserve and how much money they're going to print and what's going to happen to the dollar as a result. The fiat monetary world is a relative game. They might all be horrible. One of them is the prettiest out of all the horrible ones, right? And some people don't like that analogy. Some people use the cleanest dirty shirt or the prettiest mare at the slaughterhouse, whatever. And it's kind of a silly analogy, but it's actually true. You do have to choose one of them. And then some people say, well, you can choose gold. And yeah, absolutely. You should choose gold, or you should have some gold. But you can have gold and then also play the dollar versus the yen, or the dollar versus the euro, or the dollar versus the real. You don't have to put 100% of your money into gold. And if you don't want to have 100% of your money into gold, then you've got to choose one of a fiat currency to keep the rest of your portfolio in. And my argument is that currency should be the dollar.
So when you say there's potentially as much as about $26 trillion of international debt, which of course is about the equivalent, as you said, to our on books United States debt. So that being so, is that debt from international financial systems, international central banks, and various big high roller international money people?
Yeah, combination of all of those. So in some cases, it's at the sovereign level or the country level, and then a lot of it's at the corporate level. And the reason that it exists is again, there's demand for dollars outside the United States because the U.S. has the global reserve currency, and because a lot of commodities around the world are traded in dollars, and a lot of invoicing takes place in dollars because we have the dollar payment system that actually sends money around the world. it's just easy for people to keep their reserves in dollars. So, and because there's demand for dollars, if you issue debt, if a corporation in Brazil issues debt, they can pay a lower interest rate if they issue it in dollars than if they issue it in reals, because there's more demand for dollars. If they were going to try to issue that bond or borrow money in reals, there's not as much demand, so therefore they're going to get charged a higher price. Now that's fine as if the dollar doesn't strengthen. If they borrow in dollars and the dollar falls, that's great. The problem is they took out all this debt over the last 10 years when the dollar was weaker. And the idea was that the Fed was going to print and the dollar would get even weaker. It'd be easier for them to pay off. The problem is the opposite happened. Instead of getting weaker, it got stronger. And so now they have all this debt that they've taken out. It's coming due. A lot of it matures over the next 2 to 3 years. And the dollar has gotten stronger. And the global economy is under pressure. So they're not making as much money as they thought they were, and they have to pay back more than they thought they were going to have to. And it kind of creates this vicious cycle. And so that's part of the reason why they issue dollars to begin with, and that's why a strengthening dollar is such a problem for the global monetary system.
Is this an accident, or is this like confessions of an economic hitman, mercenary? We set the global debt up in dollars to maintain supremacy, even though it's backed by nothing. It's like another play. Instead of just pegging the dollar to the petrodollar, we just peg the dollar to the freaking global debt system. Is this a mercenary play or an accident?
I think it's a little bit of both. I think they set it up. I mean, the whole confessions of an economic hitman idea, I think to think that didn't happen would be extremely naive. I don't know if that book is 100% accurate, but the process and the system that he describes is accurate, right? And so I think it was set up that way. But then, there's always unintended consequences when things get set up. Politicians, monetary authorities, people in leadership, they'll put a policy in place and they think, wow, it makes so much sense. But then the free market does what it wants with it, right?
Yeah.
So there's always these knock-on effects that they didn't think about. And so, I think part of the reason they initially started the euro dollar market, or dollars outside the United States, was rebuilding after World War II, financing the Vietnam War, what you were talking about, the oil, the petrodollar, we provide protection to Saudi Arabia. As a result, they sell oil in dollars. There's definitely a process to that. That was a planned thing. But then, the free market comes in and puts their own little spin on it, and then they start, they get into, we don't have really time to go into all of it, but you start getting into the dark pools and the shadow banking system and extension of dollar credit through non-financial institutions.
And that's what I was asking you about.
And so I think it's a combination of it was a planned thing, but then it just morphed into this monster that they have no control over.
It's almost like that plus what Greenspan said, irrational exuberance, and everyone's like, let's just take dollar debts, and then it's just like, holy crap, and we got this really gnarly setup. So basically it's like, coupled with this monetary shutdown, other economies going like this, and with how much money the Fed is printing and these corporations are buying back their stocks and like all this, it's just making the US market of real estate equities look so much better as it keeps separating. And then you're saying everyone's going to realize it and go, crap, get me in the US markets, and everything will tank out, other economies, and things will collapse first, and then the dollar will down the road. I mean, what's this timeline scenario?
Well, so what I think it probably plays out in a progression, and what I think it becomes a crisis again that feeds on itself, and it becomes a contagion. So I think it likely starts in the emerging markets, places like some of the smaller countries in Asia, Brazil, Turkey. They have big dollar debts. Even Mexico has a lot of debt in dollars, and it can start there. And then when they get in trouble, then their business, the countries that they do a lot of business with, get in trouble because now they're not getting paid. And so then maybe it bubbles up to the kind of the mid majors like Canada and Australia, countries like that. And then it bubbles up to Europe and Japan, and eventually it hits the United States as well. Again, I don't think that the United States is going to be immune to all of this. And again, I don't think U.S. asset prices are going to be rising because things are good here. I think they'll be rising because it's just no other option.
it's almost like a panic. So everybody throws their money in, and then because the price is going up, that causes the price to keep going up, and it's like this huge bubble like that. That's basically what you see.
Right. Exactly. Think of it like a towel that's full of water, and you just wring it, right? And the liquidity just gets squeezed out of it. But pretend there's like a funnel that all that liquidity gets squeezed into, and it goes to one place.
Yeah.
And the world, the towel is the world, and the U.S. is this bucket down here. That's, as the world gets squeezed, all the liquidity flows down into the dollar bucket, for lack of a better word.
Yeah, and it makes perfect sense. I wanted to break it down really simple so somebody who's not an economic geek, understands it too. So, because a lot of people that don't know anything about the economy were still like, why is the dollar going up when everything's going to crap? So now let's talk about how, when you're saying like there's money to make off it, do you mean staying in Facebook, staying in FANG stocks like that? Are you talking about U.S. big main cap equities that are getting all the dollar flow and all the buybacks? You think there's a few years of holding there? Is that where, when you say there's money to be made, is that what you're talking about?
That's part of it. There's a number. So basically what I think is going to happen is, so I should say, I don't have all of this right. Like the last month trading for me has been one of the worst months trading of my life, because I thought the market would rally, but then roll back over and go retest those lows. And so, as the market has continued to go up, it's surprised me. And a lot of people have said, but Brent, you thought that equities would be going higher. And I did, but I thought they would be going higher along with the dollar going higher while the rest of the world came down. That hasn't happened yet. Right now, we had a big global crisis, which I was expecting. I was expecting a little bit of a rally and then another down. And then I thought everybody else would continue down, and then the US would start coming back up. So what I think is likely going to happen is initially dollar strength or scramble for dollars will be bad for US assets as well. And the reason is because when other countries need dollars to pay their dollar loans, they have to sell their US dollars to get you have to sell their US dollar assets to get the dollars. Okay. And so initially, I think that pushes prices back down. So I do still expect another downturn in U.S. equities at some point in, let's call it, the next 6 to 12 months. But then when other countries really start getting into trouble, as we get further into this currency crisis, as the dollar starts to rise, and some countries will be under such pressure that they will just be turning down, the families or the institutions or the investors in those countries who do have extra liquidity, I think they will send that capital to the United States or into the dollar. And then at that point, I think the US dollar and US dollar assets kind of get the squeeze as everybody else goes down. My point is, I don't think we're into it yet. We're getting close.
Yeah.
We've had maybe the first battle, so to speak, back in March. But it's really interesting right now. I guess it is possible that the U.S. equity market could keep going higher if we went right into this crisis that I'm talking about, and people started sending their money into the dollar before another downturn. I don't think that will happen, but I can't rule it out either. My point is if you don't want to buy U.S. equities, that's fine. But just I'm explaining how it's possible that they could go higher, especially when you realize that the whole world, U.S. included, is in countries are in debt that they're never going to be able to pay off. We've got negative interest rates because the central banks are buying all the bonds. But the free market isn't buying all these government securities or these government bonds. When interest rates start to rise because people will no longer buy those bonds for such a low interest rate, then you're going to see these countries start to go into default. And then when all the money leaves, because the government bond markets, other than the currency markets, are the biggest markets in the world. And when sovereign bonds start getting sold off because of counterparty concerns, I think that's when that money will flow into U.S. equities. And we're just not there yet. We could get into it fairly quickly, but we're not there yet.
Understood. So when you're saying that there's money to be made, you sounds like you trade the dollar against other currencies.
Yes.
And then so there's a percentage of your assets that you manage that you trade the dollar against other currencies, but then are you also have a percentage for someone listening where your personal opinion is holding top US equities and riding out a few years where
Right.
you think there's probably going to be a freaking ripping, roaring, like every day where Trump's tweeting all-time highs, baby. And it's just like, everyone's like, what the heck? And then all the gold people are freaking out. Why is this going up still? And like, you think there's going to be this weird thing like that?
Yeah, I think that's happened a lot over the last 2 months. Again, me included. And I'm somebody who's expecting it to happen, and I've been surprised by it. And so I think the last 2 months are going to be a little bit of a preview of the next 2 years. I think things are going to happen that people just can't believe are happening. And going back to my recommendations, I think everybody should have an allocation to gold. I think everybody should have just an allocation to cash. I think that cash should be in dollars because I think it will do better versus other currencies. If you've got real estate, I don't have a problem with people holding real estate. If you're going to own fixed income, I would own short term and probably U.S. denominated treasuries, because again, even though you might think the U.S. is in bad shape, it is the bedrock of the financial system. Everything else is levered off of it. So I think that would be the last man to fall, so to speak. But what we did is some of these trades that you're alluding to is we do trade currencies against each other, but we also do things like we think the Hong Kong dollar peg is going to break. So this is a case where one fiat currency is pegged to another fiat currency. And Hong Kong has done that for 30 years because they want to be seen as a safe place to do business. They don't want there to be a lot of volatility because the dollar is a world reserve currency. If they're pegged to the dollar, it makes it easy for people to invest in Hong Kong and feel like their currency's not going to get debased. It's kind of the gateway to Asia. But the reality is it costs Hong Kong a lot of money to maintain that peg. They have to spend the dollars that they get via trade to maintain that peg. And now that trade is falling, now that their markets are in recession, the fact that China's turning down, they've got their banking system is leveraged like 8-to-1, which is, ours is like 2-to-1 or 3-to-1. Theirs is 8-to-1.
Wow.
And so my point is you can put a small percent of your portfolio, let's say 5%, into these strategies that we're talking about, where you can do things like short the Turkish lira, or play the Hong Kong dollar peg, or play some real estate plays in Canada that will all come under pressure as the dollar gets stronger. And these asymmetric trades have the ability to go up dramatically if we get it right. Now, they might not pay off, but if they do pay off, if we get it right and they pay off, it's a situation where you can make multiples of your money. The flip side is maybe you lose half your money, or maybe you lose all of your money on that trade. But if you do it with a small amount of your capital, it doesn't kill you if it doesn't work. But if you get it right, it can change your life. So that and we think that the dollar getting stronger is the primary driver of asset prices around the world for the next 2 to 3 years, whether the dollar gets stronger or weaker. So if the dollar gets weaker, we're probably going to be wrong. But if we're right and the dollar gets stronger, then we think that's going to be the driver for global asset prices. And we think there's a number of asymmetric opportunities around the world to do that. I mean, because if the dollar goes to, like, the dollar index is around 96 right now, and it's floated around that level for 5 years. Gone down to, well, it went to like 89 or 88 back 2 or 3 years ago. It went as high as 103. It's bounced back and forth, but for the most part, it's where it's been for the last 6 years. We think it has the potential to go back to its all-time high of the 80s of 150, 160. Well, if that happens, then that means that that means the euro is probably at 80. It means the yen's probably at 150 or higher. It means the Aussie dollar is probably below 50 cents, probably below 40 cents. And these are huge moves for currencies. And so if that happens and you have if you have some of your portfolio positioned to profit should that happen, you can get some pretty amazing results.
Right. Okay. So then trading, then you're talking about an allocation to basically saying, don't get scared out of U.S. equities in the most traditional sense of the top handful of stocks that get the money pumps. So then let's talk about, you say this won't end well, and let's assume that this happens. We get this roaring rip of the market. Trump gets the market he wants, so he can get reelected. People are all ecstatic, and we get a couple more good years out of Trump. Or let's say we get an entire new term with Trump, and the market's ripping that whole time. But this is starting to happen. Other countries and economies are starting to feel the pinch.
Right.
and then you say this is going to end bad, and then you talk about gold down the line. Like, what is gold moving up while this whole good scenario is happening? And then what's the bad stuff you're talking about?
So I think initially, and I could be wrong on this, but it may be behind us now because it happened in March. My point was always that it's not that you shouldn't own gold. You should own gold, but you should be prepared for it to go down in a dollar spiking scenario. Not because people want to sell gold, but because they may have to sell it to get liquid and pay off margin calls or whatever it is. And that's what we saw in March. The dollar went to 103 and gold went from, I think, 1650 to 1450 in a couple days. You know, it was a liquidity event. People just had to get liquid. And so I think if the dollar breaks out again, that it's likely that could happen similarly to gold, but I think it would recover very quickly. And as we get further into this crisis, this global currency crisis, I think the dollar and gold will rise together against all other fiat currencies. So I actually think the two most important assets you can own are dollars and gold, or US dollar assets, or some asset that would pay off in a spiking dollar scenario. And so what I think will happen is that, so if you've ever been familiar with a short squeeze or look at the chart of a short squeeze, just go to Google, type in, go to images and type in short squeeze, and you'll see all these charts that just go straight up like that. And they always go higher than you think is even possible. It doesn't make any sense, but it's just because people have to buy at any price to pay off their short position. And I think that's essentially what's going to happen in the dollar is there's a short position on the dollar. People have borrowed the dollar, and we're going to get in a situation that they have to buy those dollars back no matter what the price. But if you also look at that chart of a short squeeze, you'll also notice they never last. They go up really big and then they collapse back down. And I think that's probably the similar thing that will happen to the dollar. It'll run up really high and then it'll either collapse under its own weight, or they'll come out with another Plaza Accord, or they'll introduce some new monetary system. Maybe it's a basket of currencies, including gold or whatever it is. And the dollar will come back down. And as the dollar starts to come back down, then people will be like, well, I don't need to be invested in the United States anymore. If the US dollar is coming down, then that means that the euro is probably going up, or the real's going up, or the Aussie dollar is going up. So then let's go invest over there. And if the Aussie dollar goes up, and the stock that I bought in Aussie dollar terms goes up, and that's Aussie dollar stock pays a dividend. Now I'm making money versus the dollar. So right now it's the opposite. If someone in Brazil buys a U.S. stock, let's say they buy Coca-Cola, and the Brazilian real goes down 5%. Well, they just made 5% if nothing else happens. And then let's say Coca-Cola goes up 5%. Well, now they've made 10%. And then Coca-Cola pays a 3% dividend. Now they've made 13%. That's attractive to somebody in Brazil. But now after the dollar gets really high and the role starts to reverse, maybe somebody in the United States says, well, wait, if Brazil's going to get stronger, I'll go buy a Brazilian company. And as the Brazilian real appreciates, then I'll make money on the real. And if the company goes up in value, I'll make money on the company. And if it pays a dividend, I make money on the dividend. So I think what will happen is the whole system will get reversed after the dollar short squeeze. And then as capital leaves the United States, that will be bad for the United States, just the way it's bad now as capital leaves other countries. So it's basically this, it would be the same type of a scenario, it would just be reversed.
It's like a pendulum. So
no, it's exactly what it is. That's exactly what it is.
There's a interesting book, I forget what it's called, Pendulum something. And it's basically about it's talking more about the United States history, but it's talking about like the generational pendulum swings that happen every 40 years in politics. And
I think you're talking about the fourth turning.
Yeah. And then there's another one, Fourth Turning, and then there's another book by somebody Drew that kind of writes a similar style to the Fourth Turning, and it's the same concept. So in the instance, there's a lot of people that say, and myself included, I'm concerned about, and I'm sure you are as well, how much money is being printed, how great the debt is getting, and the instability of that. Can that eventually one day cause hyperinflation? You say this doesn't end well. What do you foresee down the road? Do you eventually just see this huge up and we get one last, almost like getting one last shot in the arm, and however long it lasts, 1 year or 5 years, who knows, 10 years, who knows? Right. But eventually you get to this point where there's so many people. I mean, hopefully this helps the unemployment situation, but we get to a point where maybe gold and the dollar are rising in tandem, or eventually we get a loss in confidence in the dollar with how much money is printed. Sure. How do you see all that type of stuff playing out?
Yeah. So I think
view on your prediction of the system.
So what I think will happen is that more likely what will happen is we will see hyperinflation, but we're going to see it in other currencies before we see it in the dollar. And the reason is because all countries are going to have to print. All countries are going to have to try to do stimulus to their economies. The difference is that the U.S. can print more because there's that demand outside the United States. The dollar market outside the United States rivals the dollar market inside the United States. That doesn't exist for other countries. So when those other countries have to print and print and print, that's how you get hyperinflation in those countries, because there's not all the demand. There's demand in the local market, but there's no external demand. Mm-hmm. So I think look at Venezuela right now. That's a perfect example. The U.S. dollar is still going up, but the Venezuelan, I think it's the bolivar. Is that right?
Yeah, that's what it is. Yeah, they're burning it in the streets.
Yeah, because it's lost all its value because they've printed so much of it. Right now, the stock market in Brazil, or in bolivar terms, has gone through the roof. Right, but in U.S. dollar terms, it's gone down. Huh. So what I think is likely to happen is that there will be some kind of a global reset or a new monetary system rollout or whatever it is before the dollar gets to hyperinflation. But I can't rule out hyperinflation. I just think it's a much lower event probability than a lot of people do.
Because you think that the powers that be would see this is getting really too far, way out of hand, and this could turn into the riots that we just had times a million, and they'll step in before then and say, hey, here's what we're going to do now with a new monetary system. Right. So when you say you think $5,000 gold, do you think that that's because it's a part of a new monetary system, or do you think that there becomes so much risk in the system and so much currency in the system that everyone's buying gold?
I think probably the latter. I think I don't think that the monetary authorities will put gold back into the monetary system until they absolutely have no other choice. And I think the market will figure out that gold is moving back to the center of the monetary system long before the politicians do. So I think what happens is, whether it goes from here or whether we have another pull down on a dollar spike, I don't know. But I think over the next couple of years, the gold will go higher because the market will be bidding it up the same way that they do gold, or they do to the dollar. And then I think whether the monetary authorities put gold into this basket or into this new monetary system or not, gold is going to be valued high. And it could go significantly higher than 5,000. That's certainly not a maximum for me. I think it will go to at least 5,000. And I think that the monetary authorities would prefer never to have it put back in the system, but the market might force them to do it, because when they come out with their new proposal, whatever it is, the market's going to have to buy into it. And when I say the market, it means the people of the world are going to have to agree. And after the disaster that I see coming down the pike, I think it's going to be hard to instill confidence if it's just another fiat currency. So maybe they have to do it as a basket of currencies, or that also includes, gold and oil and other commodities, or, they could use gold. I mean, maybe they do. It won't shock me if they do. Again, I think they'll fight it, but it's gold's been around forever, and all the central banks already own it. So it'd be really easy for them to revalue it higher. They've already got it on their balance sheet.
Yeah, that's what Bill Holter thinks, who I interviewed recently, that they'll revalue it. What do you think about Judy Shelton getting nominated by Trump and some of the stuff she has to say? Do you think that that's interesting, that she was one of the two people? Because she's so out. I mean, I think she's normal, but she's so out there. What did you think about that?
Yeah, it's interesting. And I think it shows that the Trump is open to having some alternative, people other than just the traditional central bankers who've kind of got us into all this mess.
You don't think that's going anywhere towards her proposals of a crypto-backed gold currency?
Well, here's my thing is, I think Trump would love a gold-backed currency the day after he leaves office.
Yeah, right.
Right. He doesn't want the handcuffs on him, but he'd love to have the handcuffs on somebody else. Right. I mean, the king of the self-proclaimed king of debt is going to want the gold standard.
Yeah, right.
But I just don't think so.
Right.
So I think maybe he is open to the idea of it being discussed And again, maybe they implement it 2 months before he leaves the White House or something. But the idea that Trump is going to ride, into Washington, D.C. and take on the Fed riding a white horse and, the bearer of the gold standard, I think it's far-fetched. I'd love to see it. I don't.
Yeah, I agree. I do find it interesting that she was, because I'm like, out of anybody, why would you even pick her? Is it a preventative in case shit really hit the fan and they actually did need to come up with a new monetary system, so they have her just in case? I've wondered what the heck. So when you say things are gonna one day things will get really bad, how do you think that people? What do you mean by that, and how can people prepare for that?
Well, like I said, typically short squeezes don't end well. And, whenever you get a parabolic rise in assets, they always end up crashing. You don't go to a parabolic rise and then just stay at a sustained plateau. It typically goes up and then, the pendulum, it comes back down. I think when people either lose confidence in the U.S. or the U.S. government or whatever, or the dollar, because they've either printed too much of it or the social order's breaking down, I think then that's when the dollar loses value, and then it kind of becomes a self-fulfilling prophecy. But, we just look what's happened in the last 10 years. 10 years ago, we had the what was the protest on Wall Street? I can't remember the name of it now.
Occupy Wall Street.
Occupy Wall Street. Yeah. And then, we've had a lot of the Black Lives Matter recently, and, a lot of the protests for racial equality. And you can see things are starting to break down, and I don't expect that to get a whole lot better I'm hopeful. Yeah. I just don't expect it, right?
Yeah, my concern is that this money printing creates, and with how many people have lost their jobs, that the unemployment doesn't get significantly better, but the stock prices are going up and people revolt over all-time highs. Okay,
so this is you just hit on a very important topic, and that is that a lot of people tell me that the Fed will bail out the rest of the world. Don't worry, because I keep saying the crisis is in the United States, but it's even worse outside the United States because they can't print dollars. And then people will tell me, the Fed will just print the dollars for the rest of the world. Well, it's very easy to say in theory, but if you've got a populace at home who's unemployed, and maybe the rich are still making money because the stock's going through the roof, but if you have people who are waitresses and bus drivers and janitors who aren't working because of COVID or because of the economy's down or because we're going to have these bankruptcies or whatever the reason, and you have borrowing becomes harder and less available, but the stock market keeps going up because they're pumping money into it and the rest of the world's pumping money into it. You get an even greater social divide. And then you get riot. I would argue that a lot of the riots we've seen over the last couple of weeks have certainly been racially influenced, but it also has to do with a lot of these citizens have been unemployed for the last couple of months, and they're not making money. Their stocks aren't going through the roof because they don't own stocks. And when you're cold and hungry and frustrated, you protest. And not to mention all the other injustices that have happened. So I think that kind of thing can continue to happen, and I think it will somewhat diminish the Fed's ability to bail out the rest of the world. I have a hard time thinking you can bail out Bangladesh when people in Bakersfield are unemployed, or how do you bail out Norway when people in Newark don't have food? You know what I mean? And so
I agree.
It's easy to say in theory, we'll just bail them out. But to do it in practice, I think, is a little different. They were protesting on the steps of the Treasury last week. I think they might have even entered the Treasury building if I remember right. So, I don't think the central bankers are going to get out of this with a positive, reputation.
Yeah, that's you hit the nail on the head. That's my concern, and I have even seen interviews of people at the protest saying, yes, this is about Black Lives Matter. That's what brought us all here.
Yeah.
But there's so many things as well.
Absolutely.
There's the economic system, and they've said that expressly. Yep. So,
well, let me make a point real quick, because I think this is important. Because even over the last week, a lot of people have emailed me or sent me direct messages saying, Brent, now the social unrest is happening in the United States. Won't this cause people to lose faith around the world, cause people to lose faith in the dollar? And I think it probably has caused people to lose a little bit of faith in the dollar. But what I would say is, listen, this is going to happen on a global basis. It's already happening in Paris. It was happening in Spain last year. For 6 months last year, people in Hong Kong were protesting China. When the housing collapse comes to happen in Australia, there's going to be people protesting there. So again, I don't think that the protests are a uniquely American phenomenon.
Yeah.
We certainly have a lot of sins to pay for, and I think we will pay for them, but I don't think we're in a unique situation here. And that's why I think that the faith in the dollar will last longer than faith in other currencies, for better or worse. I don't think we deserve it.
Yeah.
I just think it's going to happen.
It's the lesser of two evils, and you're just trying to rationally deduce an outcome. So you talk about the Australian housing collapse, then we've got like 100 trillion in unfunded liabilities with pensions and everything like that. And there's so much of that going on. Why do you think that so far they've just been able to print all this money and kind of smooth everything over? And it's made people docile, where they're just like, most people don't want to listen to me talk, because they're like, dude, it's going up. Who gives a crap? Right? Like, where it's all going to be fine. Well, why can't they just keep printing more and more and more and more of it? And people just say, okay, it's fine. Because I'm looking at it and I'm like, shit, am I wrong? Like, because no one wants to listen to me at all, because now Microsoft's back up above 180 and, now I'm a lunatic. And they think that this in their, why can't it? I mean, now I'm starting to wonder, am I an idiot? Or am I being so rational and they're going to be able to keep this going for the rest of my life?
Well, I guess I think that is part of the reason why I don't know if you want to call it pounded the table or been so outspoken on this whole dollar thing, is because, listen, I don't know for sure that I'm right. I think I am, but I don't know for sure. But I know that it's possible. I know that it's possible I'm right. And I don't think many people think it's possible that I'm right. And so I've tried to lay out a scenario where, Apple could go to $500, where Microsoft could go to $300, or whatever it is, right? Well, the stock market could go back to all-time highs and keep going higher. Again, I don't know for sure that's going to happen, but I can envision a scenario where it does. And, I always forget who came up with this quote. I always attribute it to Doug Casey. I don't know if you know who Doug Casey is.
Doug,
but I'm pretty sure he's the one that he said, imminent does not, or inevitable does not equal imminent. And listen, I am a huge believer in gold. The US dollar is a hugely flawed currency. It is going to fall. But these, gold newsletters have been around since the late 70s. And, the same arguments were made in the late 70s. That's 40, 50 years ago. So these things take a long time to play out, right? And so, I think gold will do phenomenally well, but it might not do that over the next 5 days or the next 5 months. I don't know. My point is, these things, when people ask me, how can it possibly go another 2 or 3 years? I said, well, it's gone 2 or 3 decades already. Why can't it go another 2 or 3 years? And
I guess in my head, I'm like, can it go for 20 years?
Well, I think that's the thing is I can't say no, but I don't think so. And part of the reason is because if the U.S. was the only one in this position, then I would say, it's going to collapse soon. But the fact that the whole world is in it, I don't think that the whole world can keep it going for another 10 or 20 years. Or I should have said, if it was just the U.S., then they could figure out a way to paper it over and they could extend it 10 or 20 years. But because the whole world is in the same situation, all of these debts around the world, it just can't be paid off in real terms. So they're either going to get inflated away or defaulted on, or a new system's going to be reset or whatever it is. I don't think we've got another 20 years. We might, but I just don't think so.
Yeah. And it could also be that all this power happens with U.S. equities, U.S. assets, U.S. dollars, and gold moves tremendously with it. Before the coronavirus stuff happened and the market was at the start of the year at these really high levels, gold was doing quite well. And you do see all these billionaires that move the needle saying, I'm staying in there. So when you basically see this, and then you see one day the dollar falling out, and then they basically introduce a new monetary system, and then we just move forward and conclude.
I think that's likely. Don't know for sure, but I think that's likely. I don't necessarily think the dollar will disappear, but maybe it's no longer the world reserve currency, or maybe it's no longer the sole reserve currency. Maybe it's part of a new basket or a new, maybe they just go around the world and they write off all the debts that are on the central bank balance sheets, and we go back to kind of the way things are now for a few years. And I mean, anybody who's studied fiat currencies know that they eventually lose their value and people lose faith in the currency and something new has to come along. It takes a long time for those cycles to happen. But, when you look at things like all the debt in the world now, all the social, unrest around the world that's going on, you look at it in the context of the fourth turning, you can just kind of see how over the next, 5 to 10 years, we're going to have this event, for lack of a better word, where, change starts.
Yeah, I think it's, I can't even see this unrest going away because it's going to get worse and worse and worse leading up to the elections. And now it's made it so if the left wins, now the right is going to feel justified in doing the protests the left did. And if the right wins again, you've already seen what the left has done. So it's going to, so in conclusion, ending on a positive note. So tell me, let's say in conclusion, you think that there's still some great opportunity in people being in stocks and not to freak out. The end of the world's not coming tomorrow. Second is maybe consider getting at least even a small allocation of gold. If you're someone like myself that has a large one, have a long-term outlook and don't pull your hair out. This gold doesn't move the same way that Bitcoin does. Then in conclusion, let's say if you were head of the monetary system of the world, what advice would you give to people that can ensure their prosperity, and how would you create a better monetary system in conclusion as you head into your next call?
Yeah. Well, I guess if I was the head of the monetary system, I'd probably resign because I don't want that job. But, in a perfect world, we would just let we'd let the market decide what money was. And there'd be all different kinds of money. They would all compete with each other, and one of them would emerge as a winner. My opinion is gold would emerge as that winner. But I also think everybody should own gold as an insurance policy. But I also don't think you should have all your money in gold, because politicians do not want to use it. And they're very powerful, they're very clever, they're very sneaky, and they can come up with all kinds of ways to not use it, right? And so don't put all your eggs in one basket, even if it is gold. And then I think if you have some excess savings, and no matter where you're at in the world, I would hold it in dollars. Having some cash on the sidelines is not a bad idea, especially if you're overseas and you can just hold some US dollars. I think you should own some equities, but I do think there's going to be another pullback before we had the big plunge. We've had the hell of a rally. I think at some point between now and the election, we're going to see some further weakness. But if we do get another big sell-off, I would say don't be afraid to buy some. You don't need to put 100% of your portfolio in it, but I think owning some big blue chip U.S. stocks that pay a dividend probably be a good place to be over the next couple of years. And then I think what I would say is have an open mind. Don't put anything out of possibility, and don't bet 100% on anything. Even my theory, people say, how are you sure? I'm very confident in my theory, but I wouldn't put 100% in it, right? You always have to be open to being wrong. So have kind of an open mindset. Even if you're somebody who loves gold and you think gold's going back to $5,000 or $10,000, have an open mind that it might not do it right away. Have an open mind that the dollar might go up as well. Have an open mind that stocks might not crash all the way to zero. And I think if you have kind of a mix of those different assets, and I'd say, just be good to your friends and be good to your family, and try to not to listen to everybody else, because if you think it's crazy now, it's probably going to get crazier.
So nuts. That's what I'm trying to do. Nobody understands.
This is a horrible answer I just gave. I hate that. I probably didn't even answer the question you asked.
No, you didn't at all. But it's like, what do you say? It's like you look at everything, you're like, people have no idea how ludicrous it's going to get.
Yeah. But I would say, to be fair, I would say if you have a combination of gold, dollars, U.S. equities, and maybe some asymmetric plays that you think, maybe some little bit of cryptocurrency, and some other asymmetric ideas, some private companies that you think have a good chance, maybe that's probably about as good as you're going to do.
Fantastic. That was great, Brent. You're not as controversial as I thought you were going to be. Why are you so nice? Everyone makes you out like the devil.
Well, I think part of the reason I think is I'm pretty active on Twitter, and sometimes emotion and a lot of stuff gets lost over Twitter, and I might say something with a smile and kind of being funny and sarcastic, and they might take it as a serious statement or whatever. But anyway,
I'm just playing with you. Gold bugs are just passionate bunches that are very we're very extremist.
Yeah. Anyway, well, I appreciate you calling me and inviting me on. It was fun talking to you, and love to come back at some point.
Yeah, absolutely, Brent. You have a great rest of your vacation.